Good afternoon. You're watching your stocks from the CNBC-TV18 Motilal Oswal studios. I am Hormuz Fatakia. Not a very good day if you are a bull. The Nifty is fighting to hold that 22,550 mark on the downside. The only solace, though, is the fact that the broader markets are attempting a bit of a recovery from the lows, be it the mid-cap index or the small-cap index. Still, the recovery that is now getting sold into in the mid-cap index, still 1% down. The small-cap index, though, is still 0.9% lower, but still trading in the red. If you can pull up the advanced decline ratio as well. Nigel was mentioning just a few minutes ago that the advanced decline ratio at the start of the trading session was just around about 300 stocks in the green. That at one point went up to around 800. Is now down around 660 in the green with almost 2,000 stocks in the red. But joining us today to answer all of your queries is Ashish Kyal from Wave Strategy Advisors and Gaurang Shah from Geojit Financial Services. Gentlemen, good afternoon. Thank you for joining in. And first up is Vishal Lunia, who is writing to us from New Delhi, who is having shares of IIFL Finance at 435 rupees. If he wants to know if he should hold those shares or buy more to average the price. Ashish, on the charts, the stock is significantly down from the buying price at 435. It's now at 312. Is there any indication, in considering the market that we are in now, that is there any indication that the stock might move back to around 430, or should he just exit at these levels?
Hi, afternoon to you and all the viewers. See, if you look at the current market scenario, we can clearly see most of the stocks in the mid cap and the small cap space are moving lower along with the broader markets. And IIFL has not shown any kind of a positive attempt yet. However, having said that, there is a very important support which it formed in the month of March 2024, and it is currently around those levels. So I would suggest not to average at current levels. Let us see if the stock can manage to show some kind of a positivity and manage to break the resistance of around 330, 335 levels. Once it breaks that level, then there is a possibility it can go back towards that 400 mark. So for now, hold on to your existing investment. Possibly look forward to break out above 335 levels to add more. And on the downside, a very important support comes near the zone of around 297. So as long as 297 is there, I think there is a possibility of a short to medium term recovery in this stock that can be expected.
Right, Gaurang, good afternoon. I'm sure there would be better opportunities within this NBFC pocket compared to IIFL Finance, or is there, or what would you advise this gentleman?
Well, thank you so much, Omar, and good afternoon to all of you all, and thank you for having me on this platform. So let me give you a view on the stock market first, because all these entities are related to stock market. So in good times, each and every company which is associated with stock market, whether it's a platform provider, whether it's a service provider, or whether it is an intermediary, all of them are likely to do well. The point is, what is the kind of time horizon that you're looking at? I won't be specific on IIFL Finance since we don't have a coverage. But if your view is that the Indian stock market is going to do good for the next 3 years, 5 years, or maybe more, then all these companies will do well. It is only a matter of time. We had good times for the last maybe about 2-3 years, 3.5 years, seeing higher double-digit return on sensex and nifty. Stock specific, you got good returns. But now we are in a reverse mode correction. So all these related stocks are going to underperform. If you want to make a switch to a NBFC, a diversified NBFC, we have coverage on names like L&T Finance, Shriram Cholamandalam, Bajaj Finance, for example. But if you want to stay in stock market related entities, then I think you will have to be patient enough to get any meaningful returns from your investment.
Being patient is the order of the day, right? Considering the screen that you're witnessing right now. Moving on, then Shashank is writing to us from Hyderabad, and he has around 7,500 shares of IDFC First Bank, which he purchased at 62. Now, he wants to know whether he should hold on or he should exit his investments. Now, Gaurang, there has been a lot that has been spoken about IDFC First Bank within the private banking space, calling it the next so-and-so. But what is the future that for IDFC First Bank? The price right now is very close to the buying price of this individual. What should he do with that?
So almost if IDFC Bank has to become the next so-and-so, what will the next so-and-so bank become? That's the counter question, right? Yeah, but coming to IDFC First Bank, we have an accumulate stance on IDFC First Bank. 2 quarters were a little bit below the street estimates. In fact, for the second and the third quarter, on both the quarters, the bank had taken a hit on the MFI segment. The management post the earnings in the PC did mention that they are working on the recovery path. which would be slightly visible in the fourth quarter and more so in the new financial year starting 1st April 2025. 71 approximately is the target on IDFC First Bank, considering the current numbers. If the improvement comes through and if the numbers are better than what they've done in the last 2-3 quarters, these targets would get revised. But we'll have to wait for the numbers to come by.
71 is the target, still below that recent peak of 86 that it had made. But Ashish, what are the charts indicating for IDFC First?
On the charts, if you look at it since the December mid onwards, the stock is consolidated. So I look at it as a positive sign, because when we can see the broader market has been going down and stocks moving down, this stock is still trading around the levels of around 59-60 levels, which is around 2 months back. So that's a positive sign. I think post this consolidation, we can expect a move on the upside. The immediate target can remain around 68 levels. And also it has protected the low, which is around 56.80. So that remains a very important support level. So as long as 56.80 is intact, I think we can expect it to go towards 68. And eventually the stock, if the time horizon is for a year, we can expect it to go to the levels of 74 or 75 on the upside.
Important levels there highlighted by Ashish, expecting to go to levels of 74, 75, provided the levels on the downside are held. Well, Raghavendra Rao is writing to us from Hyderabad. Now, he has 160 shares of BSE, which he purchased at 460 rupees. Now, he's a long-term investor, very much in the money, and he wants to know whether he should continue to hold on or sell at these levels. Ashish, what are the charts indicating? 460 rupees purchase price. The stock is at 6,000. What's the stock? What are the charts suggesting here?
I'm not too sure if he purchased at 460 or 4,600. I'm assuming if he purchased at 460, it has done fabulously well. I mean, if you are riding the trend all the way till current level and holding on to it, there is no reason to book out right now. Also, this is the power that you can see of compounding in when you are invested in a stock and in a good stock. So my suggestion would be continue to hold on. The stock has done exceptionally well. Even in the recent moves, if you check, it bounced back sharply from 5,200 levels to 6,000. And once the 6,000 is broken, it will resume its 52-week high territory. So continue to hold on BSE. The support for the stock is at 5,200 on the downside. And we are expecting the stock to reach towards the level of around 7,000 eventually.
Gaurang, I guess you'd be holding on to similar views, considering it is a capital market play as well, BSE, especially considering the upcoming NSE IPO, the NSDL IPO. What's your call here?
Well, so I will again, rephrase the same sentence that I said, that this is one of the leading platform providers for the Indian stock market. Next 2-3 years, 5 years, stock market will do well. Volumes will go up. Revenues will start coming in. And of course, you will have newer products getting launched, etc. So don't have a direct coverage, but one of the strongest competitors in terms of the Indian stock market growth story. And I'll also say this, Hormuz, that see, when you get invested at I'm sure, I have seen levels of sub 500 level on BSE some time back. So this gentleman would have definitely gotten at the price that he's mentioned. The art of investing is all about making profit out of your investment. And when you're making this kind of a return, I think you should introspect to get at least your capital and a little bit of profit out of your investment, so that the rest of your holdings remain absolutely of zero cost. By no means I'm saying that you should sell or something like that. This is just a suggestion that making profit is also important, as much as it's important to invest in stock market.
Indeed, that's true. That holds true for almost every investing philosophy, right? And Sweta Mohan is now writing to us from Coimbatore. She is holding 20 shares of UltraTech at 95.20 since April of 2024. Now, she wants to know the long-term view on the stock. Gaurang, a cement space not very much talked about in recent times, considering there are a lot more areas that we've been focusing on. But if the infrastructure play needs to be played upon, is cement the ideal theme? And if so, is UltraTech the right stock?
So it is the core theme almost, because without steel and cement, you can't create an infrastructure, right? And UltraTech has the largest production capacity under its belt. We've been maintaining a buy for a pretty long time on UltraTech Cement. Expect center and state level, capex to kick off much stronger from where we are right now. Real estate sector is also a large contributor to the earnings of the cement manufacturing companies. Our targets on UltraTech currently stand at about 12,650. hold on to it. And if you want to add to it, in case if you have a lower price than your earlier acquisition price, you can definitely do that as well.
Ashish, what are the charts suggesting for UltraTech?
See, if you look at the charts, I think it's almost nearly 8 months, and the stock has done a very good consolidation after a big run up, and then that's a good sign, right? You are pausing for accumulation at a much higher levels, and then possibly setting the tone to ride the next trend. So I would suggest continue to hold on here. The overall medium to long term trend looks to be very much intact for UltraTech Cement. We can expect the stock to eventually move towards 12,200 and possibly towards 14,000 levels on the upside. And on the downside, the support for the stock is going to be around 10,500 levels.
14,000 on the upside, well above that 12,145 peak that the stock had made. Interesting call that from Ashish. But gentlemen, stay on. We'll take a quick break and we'll be back on the other side to answer more queries. Stay tuned. Welcome back. Still continuing to hold on to that 22,550 mark is the index. But to answer more queries now, Gaurang and Ashish are still with us. And Shishir Bondre is writing to us from Akola, and he's holding 561 shares of Mahindra and Mahindra at 29.61. He wants to know what's the short-term view on the stock. Ashish, what are the charts indicating now after the fall that we have seen from the 52-week high?
See, you can see that the stock has moved down towards around 2,700 levels from the highs, but that's as Gaurang also said, that's a part of the market right now, where we are seeing a systematic sell-off, where most of the stocks are moving in tandem with the broader sell-off. So, but having said that, the stock has still relatively outperformed. It has still not breached below the low of around 2,630, which is a very important support, which was made in the month of August, September last year. And I think it's at a very important cusp. So my suggestion would be if he wants to average or accumulate more, can do that at the current levels. I'm optimistic about the sector as a whole. And we can see M&M to be reaching towards the level of 3,200 or higher eventually. On the downside, 2,630 remains immediate support for the stock.
Right, Gaurang, there have been plenty of concerns regarding M&M with surrounding the potential entry of Tesla. Many of them calling the concerns to be overblown, but the street seems to suggest otherwise. Looking at the price action, M&M has been an outperformer over the last 12 months or so. What's your call here?
Well, so we have buy on Mahindra and Mahindra Hormuz, and I was reading a report. I don't know how far it is true, but even at an entry level after the reduction in import duty for EVs, even if it is bought down from 110 to 10 or 20%, eventually the Model 3 is going to cost anywhere between 35 to 40 lakhs. That's what the report said. This is the showroom price. Add to it your tax and your insurance. So your price tag is going to move up significantly higher. And there are plenty of variants available in the similar segment from the domestic manufacturing companies. So we have a buy on M&M from a long-term point of view. And I think these price corrections are a great opportunity to add such large cap stocks into your portfolio.
Price corrections are a great opportunity to add, and from levels of around 3,200, the stock's fallen to 2,700 now. Moving on then, Anaga Nair is writing to us from Kerala. She has 440 shares of Tata Motors, which she purchased at 712. She wants to know whether she should continue to hold on or sell at current levels. Well, Gaurang, another story of an outperformer gone wrong, went up to almost 1,200 Tata Motors and is now seeing no floor whatsoever. Many concerns around JLR as well. What's your call here?
Yeah, so again, somewhere around 45% retracement from the higher levels on Tata Motors. We have a whole recommendation Tata Motors. Hormuz, we believe Sanand is going to augur well in terms of production facility for JLR, which will enable a lower price tag for the JLR models. Domestically, in form of Tata Motors, well, the cars are doing extremely well. Commercial vehicle business is also doing well. There is a news of hiving off the commercial vehicle business into a separate entity. There is also a news that the management mentioned about making the balance sheet debt-free. So from current levels, your downside is extremely protected. Hold on to it. And if you have investable amount from a long-term point of view, you can add to it to bring down your acquisition price.
What about the charts, Ashish? Is there a floor for Tata Motors now from almost 1200 down to 650? What are the charts indicating?
Yes, absolutely. I mean, this is one stock that many of the investors might want to know what's going on and why it's not stopping, where the stock has reached towards the level which we have last seen, I think, in September, October 2023. That level, the stock has touched and it has retraced nearly 50% from the all-time highs. I think that it has a very important support near the zone of 640, 630 zone. That's should remain intact. It's what looking like on the charts as of now. And I would recommend to continue to hold on, possibly accumulate the stock at these lower levels. And eventually, we can expect the stock to move towards 850, 900 levels again. But the time horizon has to be at least a year and a half more, and then we can expect it some kind of a blockbuster move that can happen. Having said that, we also have holdings on the stock of Tata Motors.
Blockbuster moves. I'm sure those holding on would be definitely anticipating some. Well, Priyank Gupta is writing to us from Noida. He's holding 15 shares of Metro Brands at 967. He wants to know whether he can hold the stock for the long term. Ashish, what are the charts indicating here? 967, the purchase price, very much in the money. The stock's at 1100.
Yes, I would suggest right now, if possible, possibly you can look forward to book some profits here because it's giving you money. And we are seeing some kind of a breakdown from the levels of around the immediate support was around 1120, and the stock, I think, is moving around that area right now. So book some partial profits on the downside, maintain a stop loss for the remaining positions around 1040. And on the upside, the stock needs to break back about 1250 for stability.
Right. Final word from you, Gaurang. Not a space that gets talked about significantly as well, other than Bata. But if you have any word on Metro Brands.
So we have coverage on Bata almost as a disclosure. We like the space. There has been a lot of instances of dumping and cheap imports to India from China and Bangladesh as far as footwear is concerned. A PLI scheme is also applicable to the leather industry, including the footwear manufacturing companies. Strong brand in terms of market share, Metro Brands. Unfortunately, no specific comments since we don't have coverage on Metro.
All right, Gaurang, Ashish, thank you so much for joining in and answering our viewer queries on the show today. But that's all we have on this edition of Your Stocks. But do remember to email us your queries and we'll address them with our experts. Closing bell to take you through the final 60 minutes of trade. From me and the team that put this show together, it's goodbye.